Listen here, folks. Straight out of work, we're bringing in some bangers. We're starting off with a company that reported pre-market with Spotify, okay? Spotify, obviously a very important one to talk about for a lot of reasons. Well, this is a great technology company and really the leader in streaming music and frankly podcasts at this point too. So really working on diversification. It's kind of where they're headed. But again, the main thing that people need to focus on with Spotify is going to be user growth. User growth is key. Because that's what kind of gets the stock up. We'll take a look at these earnings, see why it popped today. Well, let's just be clear. Someone's messing with me, and you're going to report this in euros, okay? You're going to report it in euros. Who do you think you are? Just recall, I mean, it's right around $1.15 per euro, so just consider that. Multiply it. Just multiply it. You can do that. I didn't kick the desk. You did. Negative 41 pence. Misses by 29 pence. Okay, that's a pretty big miss on a profitability standpoint. And again, this is a company that I don't quite get why they haven't. I mean, I get it. It's still relatively in infancy. And when you think about the lifespan of a tech company, it kind of is still in its infancy. Debatable if it really is, but this is such a potentially high profit business. The margin should be incredible on this one. And I'd like to see that kind of improve for them, to be honest with you. The revenue standpoint, 2.5 billion euros, is up 26% year over year, beats by 50 million euros. So pretty solid numbers. That equates to, let's do the math in the brain here. Let's do the math in the brain. That equates to right around $3 billion. What can I say? I mean, the math's just done. It's not really quite there, but right around $2.8 billion. Really right around 2.9 actually, if we're being honest with each other. So let's just consider that a small beat. I would kind of expected better numbers to see this thing pop so much. I mean, I don't know about you, but I kind of expected better. Monthly active users at 19% increase year over year. They hit 381 million compared to a 381.8 consensus, so they were under consensus even. Kind of shocked to see this thing pop the way it did. Maybe that's just me. Premium subscribers grew 19%, came in at 172 compared to a 172.7 consensus, so a miss there too. I don't quite know if we'll see. Maybe there's something really good here. Guidance coming in at 400 to 407 monthly active users. It would be massive if they're able to hit that. Premium subscribers expected to grow around 5 to 9 million subscribers there. Revenue coming in at 2.54 to 2.68 billion euros. On the higher end, right around 3 billion dollars. So keep that into consideration. Gross margin only at 25.1 to 26.1 expected. And an operating loss still continued. That's where I'd like to see this company turn around. We'll take a look at the press release, see what we can find here. So on the far left here, again, you can see the comparison in terms of growth. We see a 4% growth quarter over quarter in monthly active users. Premium subscribers grew 4% quarter over quarter. And ad-supported monthly active users, which is the non-premiums, are 5% quarter over quarter. So, yeah, obviously you can see how much more money they make off of premium in terms of as opposed to ad-supported. I mean, just look at the difference here. We're talking about they have, 50 million less premium subscribers than they do ad-supported, yet it equates to right around, I'll say right around 7 times the amount in terms of revenue is what premium brings in. So just consider that. Premium is obviously the key. That's what they want. That's what they want to grow. But again, you do see how ad rates have raised for them. So the ad-supported grew 75% year over year in terms of revenue. So you see how ad rates help them there. Gross profit, it's an improvement, but we like to look at the operating loss, not looking great, and a free cash flow is not really what you might have expected. No change year over year. Quarter over quarter grew quite a bit, but no change year over year. And then the free cash flow. Actually, free cash flow declined slightly. So that one, I'd like to see better numbers in that aspect. I would like to see it. Yeah, I don't know. What can I say? Financial metrics. Again, we look at this. Great stuff. Average revenue per user within premium came in at €4.34. Okay, 4% year over year. Not quite as much as you might have expected year over year growth, but it's not terrible. A good growth in average revenue per user is expected. I mean, you need to grow that. That's how you grow the business. Because at some point you're not going to be able to grow subscribers, so you're going to have to grow average revenue per user. It's kind of what it's got to be at. Gross margin came in at 26.7. Would like to see again, still see that expansion, all things considered. In my anticipation, product and platform, nothing crazy. We're talking about music, talk shows, podcasts, nothing crazy. I mean, it's a pretty simple business model to consider. If you're, being honest with each other, it's not that difficult to look at. No, we saw the guidance expected. Nothing crazy. I mean, I'd like to see a little bit better stuff in terms of share repurchases. Through this quarter here, they've repurchased 157.5 shares for 30 million euros at an average cost of 222.86 a share, which, if you look at it, good job by them repurchasing at that level. Pretty nice. I do want to look at this balance sheet and think about it. I look, it's in euros, but we can make it work. We can make it work. Let's take a peek where it's at right now. Okay. Total current assets here. This is some great stuff. This is what we like to see. What a weird nonsense that they're doing here. Good golly. What kind of a nonsense thing is that? It's not a good balance sheet. What are we doing here? What are we doing here, folks? You're playing games with me. This company can eat it, okay? They can eat it. So let's just take a look at what we have here. So total assets here sitting at 6.9 billion euros. That compares to 9 months ago, 6.3 billion euros. So there's growth there. You can see growth primarily here coming from the cash and cash equivalents position. So good to see that grow. While you see liabilities on the other standpoint, liabilities here as a whole, total liabilities at 4.8, increased quite a bit. So 3.5 billion the year prior. So not necessarily the greatest thing you'd like to see. You'd like to see, your assets grow by just as much as you're growing your liabilities by, which here they didn't. They grew liabilities by quite a bit more than they grew assets by over twice as much, really, right around twice as much. So equity went down on this company. There's a lot of things to consider. Look, this company still needs to work on profitability. That's my standpoint on it, and I think they need to get that improved because you're talking about a company, no PE ratio, trading in a market cap of $52 billion, obviously relatively expensive when you think about a company that in a year, technically not awful, when a company is bringing in approximately, I think they'll bring in $10 billion this year, if I'm not incorrect. I think it's right around there. So all things considered, not trading incredibly high, but I'd like to see profitability. And the growth rates are fine. I mean, we're talking about 26% growth year over year. It's really nice to see that growth rate. And they're really working on expanding the products that they're offering, because that's kind of how they'll grow in the future. That's what you got for Spotify. I'm not a buyer in this stock at these levels. Again, we're talking about nowhere near the 52-week high, so I think that's kind of why it popped. But I'm not still a buyer at these levels. I mean, I believe this thing should be close to the 220 range. Just, and I'm more than happy to be wrong in that aspect. It's just my opinion. I don't quite like where the company's at financially. Would like to see a better balance sheet. Would like to see a lot of better things, really. So if you're into the stock, obviously happy for you, but it's down on the year, and I think that's kind of why you see a pop today after bad performance. Not really a fantastic earnings report, but hope you have a great day. I'll see you in the next one.